Welcome back. You're tuned into Power Breakfast here on CNBC TV 18. Now back home on the Lal Street, the Nifty fell below the 10,900 odd mark. The Sensex lost 150 points, while the broader markets saw sharper cuts. The mid-cap index was down nearly around 2% odd, and that's really been the story of the year in 2019 so far. You'll take a look at the Nifty, you'll say, well, it's more or less flattish. The mid-cap and the small-cap indices are down between 8 to around 9% odd. Manglam's with us early this morning to run us through all the cues. Hey Manglam, morning.
Morning guys. You know, I was listening to you all on Asia. You said that the Asian markets are doing well. The SGX Nifty though was slightly underperforming and now has moved off the lows of the day. In yesterday's trading session and the previous trading session, the Nifty is more or less undone what it did in the first 6 sessions of February. So in the first 6 sessions, we gained about 240 points on the Nifty. It just took 2 sessions for the Nifty to give up around 180 points of the same. And if you calculate it from the policy day high of 11,118, it is pretty much equivalent that from the lows to the highs, the Nifty gained almost around 280 points and 229 points of those were given away. In yesterday's trading session, like you said, Nigel, you know, the mid-cap index underperformed, and that was a larger trend because in just the last 7 trading sessions, where the Nifty is absolutely flat, the mid-cap index has underperformed about 3.5% down out there. So that's a 4% underperformance there. And the IT index, that is where the money is going up around 3.9%. And not just last 7 sessions. If you take a look at the last 12 months, the outperformance between the Nifty as well as the mid-cap index has been 20%. The Nifty is high by 4%, the mid-cap index lower by 16%. And if you can compare that to the IT index, that outperformance is 45%, with the IT index moving higher by 29%. In yesterday's trading session, while all the indices were lower, the mid-caps not doing too well, the flows did not help either. So both the FIIs as well as the DIIs sold in the cash market. The big cue for today was the one that came yesterday overnight. CNBC TV 18 broke it first, and now it's official that Axis Bank, there will be the SOOTI stake sale, 3% stake sale. We'll hear a lot about that, but my limited points on Axis Bank SOOTI stake sale, which would fetch the government close to around 5,300 crores, is the fact that, well, among most of the companies that SOOTI holds stake in, Axis Bank has been an outperformer. If you take a look at it from the start of this year, Axis Bank has gained about 15%. This compares with ITC and L&T, which have been underperforming. ITC has been flat since the last time SOOTI sold stake in ITC. The price has been pretty similar. L&T has been underperforming this year. So perhaps a good move from the government to choose Axis Bank to sell the stake sale or coming in from SOOTI. Not just the stocks in which SOOTI holds stake, in the Nifty Bank as well. If you take a look at Axis Bank's closest peer, ICICI Bank, that has been underperforming, and ICICI Bank has outperformed the Nifty Bank as well. So it'll be important to see what happens to the stock post the SOOTI stake sale overhang goes away, because fundamentally the things are improving for Axis Bank. They had a good third quarter results. The company gave a strong ROE guidance of 18% as well. And this is important for the market because it holds about 3% weight on the Nifty and 10% weight on the Nifty Bank. Just for this week, yesterday we had the Nifty weekly options, and now their maximum open interest is at the 11,000 call and 10,800 put. So for the next 2 days, perhaps this is the broad range that the smart money is working with. Why is this important? Because while the Nifty is at 10,888, at just the lower levels, we have the 20, 200 and 50-day moving average between 10,820 to 10,870, just about 20 points away from where the Nifty is.
All right, Manglam. So apart from Axis Bank, what are the stocks that you're watching out for?
Well, we've spoken about Axis Bank, so we'll keep an eye out on all the results that are due today. We have Coal India, Hindalco, Sun Pharma. From the broader markets, we have Bata as well as Container Corp as well. I'll be watching out for Container Corp because it is a government-owned company. Watch out for any dividend that comes by or not. Amara Raja Batteries, the revenue came in higher by 9%, slightly below what the street was working with, but more importantly, in line with peers like Exide, who did about 9.6% growth. The EBITDA was pretty much in line with the expectations. Andhra Bank, 6th consecutive quarter of net losses. In fact, over the last 6 quarters, the company's posted losses of 5,000 crores, and this on the back of worsening asset quality as well. So that is a weak set of numbers coming in. Corporation Bank looks like a bit of a turnaround on the bottom line with an improvement in the company's net NPA as well as the gross NPA, and on an absolute basis as well, the net NPA did come off. Ester Industries, wonder what happened out there. Revenue higher by 33%, EBITDA higher by 95%, and the net profits come in at 8.5 crores. This compares with just about 50 lakh rupees in the comparable quarter. PI Industries as well, 33% growth on both the company's revenue as well as the net profit. ITD Cementation, net profit came in higher by 91%, so positive moves out there. JBF Industries, the stock has been an underperformer for the last many years. A lot of people believe the turnaround is coming. Well, it is not, because the net loss has widened to 110 crores. This compares with 16 crores loss, and that on the back of a revenue decline by almost 300 crores. Apart from results, watch out for Spencer Retail, an important management change taking place out there. Mr. Devendra Chawla, who's the ex-COO of Walmart India, now joins Spencer Retail as the MD CEO. Let's see whether he can turn around the fortunes of that company.
Okay, all right, Mangalam, thanks so much for that. Well, a quick note for our viewers then: the new rules for DTH as well as cable have come into effect from February 1st. Now, to keep watching India's #1 English business news channel, CNBC TV 18, just call your cable or DTH operator and ask for CNBC TV 18, only for ₹4 per month.